Pattaya City Expats Club is a non-profit social organisation and our speakers are volunteers. The club as such assumes no responsibility or liability for the professional reputation of or the quality of services provided by the speaker today.
Okay, there was a recent video put out by an American attorney that caused a bit of controversy about how we operate here in Thailand. I am the managing director of American National Tax Advisors. We founded it about 8 years ago. We are a fully licensed Thai accounting firm. Oddly, at the insistence of the Thai government when I set up the company in the first place with this. However, I am not legally able to practice accounting in Thailand, nor am I able to do tax returns. Thus the reason why we have staff members who are able to legally practice in Thailand, who actually prepare the returns and or do the end advice to this. In fact, Kunlek, could you stand up for a moment? Kunlek is the head of our accounting department to this, which I think is about 10 people right now. With this. We are, the firm right now is 28 people and 3 Americans in it, the rest are Thai staff members. That's how this actually operates with this. Now, one of the things I'm going to do here today is you get to meet Patcha. I'm going to call her Cha-Cha, her nickname all the time. That's what I'm used to doing. You are about to meet somebody who's rather extraordinary in this, guys. She has a Thai law degree. She has an LLM in international tax law from Queen's Mary University in London. To this. She has worked with me very, very specifically on both what the Thai tax treaties say amongst all these countries, and she's also the person who's been going down to the Thai Revenue Department for most of the last year and specifically going through these issues with this. Now, there are still unknown answers to a lot of questions out there to this, but we do have more data. She's also going to give one thing. There's going to be a change from what I've said in the past because the Thai Revenue Department has just made a change recently in an update. But her primary focus right now is going to be, again, part of that video, who does need a tax ID number and who is going to have to file a tax return. The video was saying that was seeming to say that most people don't have to file a tax return, but if you've been here 180 days, you're more than likely going to have to. She'll give you what the actual law says rather than rhetoric about this. Then we'll do a little bit of follow-up afterwards, I will, and then we can ask questions on this and whether or not you're going to have to file a Thai tax return. I'll let her law speak for itself, and then we can do questions afterwards as well. Patcha, do you want to begin with the presentation?
Okay, before I talk, สวัสดีค่ะ 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 Hello everyone, my name is Chacha. I graduated from the University of London in the area of the international tax law. I've worked as a tax consultant and tax attorney at both law firms and global audit firm, specializing in Thai and international tax planning for companies and individuals. Currently, I work as a tax attorney for Kun Thomas company. Okay. How to use? Okay. Okay. Thank you. Okay. For today's meeting, I'm gonna talk in easy explanation and concise way in the issue of the foreign income that remit into Thailand or the new tax regime, and answer the question that who has the legal obligation to file a Thai tax return under the new tax regime. Okay. Since 1st January 2024, the Revenue Department enforced the new tax regime regulation for collecting tax on foreign income that remit into Thailand. So we're gonna, what what does these new tax regimes look like? This is a law of the new tax regime regulation. It is a legal language, so it's difficult to read and understand. I believe that only tax lawyer in Thailand understand this. And I believe that no foreigners in Thailand see this law before because this law never published in the website in the correct English language. So we're gonna read this law together in order to get some ideas. And then I'm gonna simplify in easy explanation for you guys to what that this new tax regulation is actually mean, or how this new tax regulation is actually interpreted or interpretation. The person who has a laser pen, the previous one, I need a laser pen. Okay.
Oh, okay.
It's okay.
Just go ahead and read it.
Okay. Let's read the law together. Okay. The Revenue Department Order Number 161/2566. This is the name of the law, guys. To provide guidelines for tax officers in examining and advising residents of Thailand. Okay, I'm gonna stop this point. What does resident of Thailand mean? Okay, section 41 of the Revenue Code, paragraph 3 in the red color said that any person stay in Thailand for a period or periods aggregating 180 days or more in any tax year shall be deemed a resident of Thailand. Okay, go back to the new tax regulation. Okay. To provide guidelines for tax officers in examining and advising residents of Thailand who have accessible income from abroad. The Revenue Department issues the instruction as follows. Clause 1. Any person residing in Thailand having accessible income from an employment or from business carried on abroad or from a property situated abroad in the aforesaid tax year, comma, and bring such accessible income into Thailand in any tax year, comma, must include that income in the calculation for the income tax in the tax year when the accessible income is brought into Thailand. And this law, guys, is already effective since 1st January 2024 onwards. And another page of the law, the Revenue Department Order Number 162/2566, the provisions of the first paragraph shall not apply to accessible income arising before January 1st BE 2567, which is 2024. Okay. So what does this new tax regulation mean, or what is new tax regulation is actually interpreted? Okay, for easy explanation, can the handsome guy in the back see the slide? Okay, thank you. Okay. Can I expand the slide? Or cannot? Okay, for easy explanation, to check whether in the year that you remit your foreign income into Thailand, that year you have the legal obligation to file a Thai tax return or not. Under the new tax regime, guys, there are 3 conditions to consider. The condition 1, in the year that you remit your foreign income into Thailand, in that year, do you stay in Thailand for 180 days or more? In the condition 2, guys, was the foreign income that you remit into Thailand earned or arisen during the year in which you stay in Thailand for 180 days or more. Okay, between condition 1 and condition 2 is not the same meaning, guys. I'm gonna simplify later, okay? And then condition 3 said that such remitted income must be the income earned since 1st January 2024. So, condition 1 plus condition 2 plus condition 3 is equal that if in that year, the year that you remit your foreign income into Thailand, and that year you meet all of these 3 conditions, it means that in that year you have the obligation to include this remitted income in your Thai tax return in order to calculate your personal income tax. So it means you have a legal duty to file a Thai tax return if you meet all of these 3 conditions. Okay, question. Please look at the screen, guys. According to the facts, in the year 2025, Mr. A lived in London for the entire year. And secondly, in the year 2026, Mr. A stayed in Thailand for more than 180 days. And in the last fact, also in the year 2026, Mr. A remits the rental income from a property in London into Thailand. However, this rental income that Mr. A remit into Thailand was paid by the lessee in October 2025. So, my question is, in the year that Mr. A remits this rental income from abroad into Thailand, in that year, Mr. A has the obligation to file a Thai tax return or not? Okay, to answer this question, I'm gonna ask the first question to you guys. Which year that Mr. A remit foreign income into Thailand? Which year, guys? 2021? No. 2024? What? No, 2026. Not 2025.
Remit is the year he brings the money
Yeah.
directly into Thailand. That's when it hits the Thai bank account.
So 2026, right? And in that year, another question, in that year, in the year 2026, Mr. A stayed in Thailand for 180 days or more? Who said yes? Okay, yes, correct. Okay, please look at these 3 conditions of the new tax regime. Condition 1. In the year that Mr. A remit the foreign income into Thailand, in that year, which is 2026, do Mr. A stay in Thailand for 180 days or more? Yes. Condition 1 satisfied. Condition 1 meets. And please look at the condition 3. Such remitted income must be the income earned since 1st January 2024. Yes? Yeah. Because the fact said that, however, this rental income that Mr. A remit into Thailand was paid by the lessee in October 2025. So in this case, Mr. A meets condition 3, guys, but condition 2.
What she's saying here, to condense this a little bit, is this gentleman moves in January 1st, 2026. It has not happened yet. So he becomes resident in 2026. The income was earned in a year he was not resident in Thailand, and therefore will not be taxable in the year he does become resident when he moves in 2026. So he can move the money in because he earned it when he wasn't resident in 2025, in the year he's 2026. This is similar to the 2024 rule she'll go back to with this. Any income earned prior to January 1st, 2024 is not taxable if you bring that income into Thailand. It's only going to be the income earned after January 1st, 2024 that's brought into Thailand if you were resident for 180 days, with exceptions, and we'll go through those a little bit later on.
Okay, so condition 2, guys, was the foreign income that Mr. A remit into Thailand earned or arisen during the year that Mr. A stayed in Thailand for 180 days or more? No, right? Okay, so in this case, to answer this question, in the year that Mr. A remits this rental income from abroad into Thailand, in that year, which is 2026, yeah, Mr. A does not have the obligation to file a Thai tax return because in this case, Mr. A does not meet the condition 2, guys.
Oh.
Okay, many clients ask me that what does the word remit or remittance means from the perspective of the revenue. From the perspective of the revenue, remit means any actions taken to bring accessible income into Thailand. For example, transfer foreign income from foreign bank account to Thai bank account, or transfer money via online system, or withdraw money from ATM of a foreign bank that located in Thailand, or bring foreign income in cash into the country.
Yeah, okay. The ATM withdrawal is the brand new one, okay? Up until very recently, they were saying they were not going to track ATM deposits. And Chacha, if I remember correctly, it was a revenue update guide.
It's a revenue booklet.
Revenue booklet that they have
Yeah.
just now added in withdrawing money from an ATM. So the idea of this guy's going out and just pull money out of your ATM, and she'll go through how this gets tracked later on, but that is a new change the Revenue Department has just come down with.
And the revenue legal team confirmed this, Thomas. Confirmed this.
Yeah.
The legal team of the revenue. Okay. This is the revenue booklet that in the website of the revenue, guys. And okay.
This is how they can potentially track this. Now, one thing about this, guys, they're not doing this right now, okay? This is what the law specifically says and what they can do
Yeah.
in all these things. So don't be overstressed thinking, oh my God, I've got to go through every ATM withdrawal I did last year. But this people ask how they can track it. She's going to go through how they do.
Okay, from all of this example, it triggers the question that how the revenue check this. How the revenue check this. For example, you withdraw your money from ATM of a foreign bank that located in Thailand. How the revenue check this. Nowadays, Thailand is a member of the Global Forum on Transparency and Exchange of Information for Tax Purposes. It means that the countries that be a member in this forum can send your financial information to the revenue authorities in each country. So the Thai revenue can request your foreign financial information from the country where the bank is located and compare your cross-border transactions with your Thai tax obligations to check whether you paid Thai tax correctly or not.
Okay, again, guys, this is not heavily in place at this moment. It's able to be done, but don't expect them to say, "Oh, I've pulled $2,000 out of the ATM," and they have to go track it. What they have to do is they'd have to identify that ATM card, then go to that bank and identify the name of the account holder with this. They're not doing that. Not that I'm going to say use that to avoid taxation and reporting, but don't over panic about this as well at this particular point. However, the way these systems work, the screw right now is sitting on the table. Eventually it will go in the hole and they will start tightening the reporting year by year by year and month by month. So this is going to occur where this will start being automatic. If they see an ATM card used for more than 6 months in the country, they're going to start asking for the information on who owns that card and then identify you back.
Okay, many clients ask me that, Getting a Thai tax ID is a law or not? It's a law, guys. Section 3 of the Revenue Code. Section 3 undecim. This is the name of the section. For the purpose of collecting tax in accordance with the Revenue Code, the Director General shall have the power to prescribe that taxpayers shall obtain tax identification number in complying with the Revenue Code. And another section said that, Section 3 duodecim said that a person violating or failing to complying with the Director General's announcement issued under the Section 3 above shall be subject to fine not exceeding 2,000 Thai baht. And another announcement of the Director General of the Revenue Department said that taxpayers must have a taxpayer identification number. Clause 1. Individuals liable for personal income tax, they must file a request for a taxpayer ID. And this announcement is already enforced from October 11, BE 2545 onwards, which is 2002, right? Okay, let's go back to this one. Section 3 duodecim said that a person violating or failing to comply with the Director General's announcement issued under the Section 3 above shall be subject to fine not exceeding 2,000 Thai baht. Okay, in my opinion, fine 2,000 Thai baht is a small issue, guys. The big issue is if you require to get a Thai tax ID and if you require to file a Thai tax return but you do nothing, the consequence is it's gonna be more severe. From my experience as a Thai tax attorney, I have a client who never filed a Thai tax return for 5 years. And in the year 5, the revenue challenged him back that he owed the debt of the tax with the revenue around 18 million Thai baht. 18 million Thai baht is around 700,000 US dollars, guys. You can buy 7 condominium in Thailand. Okay, and the consequence after that, the revenue department seized his property in Thailand and also freeze his Thai bank account and also block him to fly out of Thailand to go to America or USA in order to marry his wife. So my client came to me that, Chacha, could you please help me to negotiate with the revenue and claim to the revenue that the reason that I never filed a Thai tax return for 5 years because I am a foreigner. I cannot speak Thai. I cannot read Thai language. So I don't know how Thai tax law is interpreted. It's unacceptable reason, guys, because the Thai tax law is already published in the Royal Gazette. It means that the Thai tax law is already in effect and applies to everybody in Thailand. So everyone in Thailand must be aware of the Thai tax law. Okay.
He about out of that 18 million baht, about 9 million baht of it was fines, and we were not able to get him out of the fines. We were able to help him pay that off and then work with the U.S. because he was filing his U.S. tax returns and get a tax credit back from the U.S. With this. And in fact, she's going to mention this next part of this. We've talked about deportation on a regular basis. It's an option for the Thai Revenue Department to use. She'll go through this a little more.
Okay, this is the wording. The wording that include in the letter of the revenue from my client. Okay, you guys can see that. Note, intentional tax evasion under the Revenue Code may result in civil and criminal penalties. In addition, foreign individuals may face deportation or revocation of their residence or citizenship.
That's You'll hear a lot of guys going, I'm going to ignore this. It hasn't been done in the years in the past. And this goes all the way through the citizenship. They risk deportation. In the particular case, they made the one gentleman pay the 18 million baht before he got the tax credit from the U.S. And in his case, they seized property and they would not let him go back to America to do his wedding. His fiancée was less than pleased.
Okay, for the minimum income threshold per year, that requires taxpayer to file a Thai tax return under Section 48 of the Revenue Code. Okay, for example, if you remit only pension in that year, and the amount of your pension that you remit into Thailand more than 120,000 Thai baht per year, you are required to file a Thai tax return. Or if you remit other types of income, such as rental income, dividend, interest, other types of income from the income above, if you remit more than 60,000 Thai baht per year, you are required to file a Thai tax return, guys.
Yeah, especially the attorney from the last video, this was part of it, was he was admitting that not everybody's going to have to file a Thai tax return. Who here is making more than 60,000 baht a year in international income that you're bringing in? Guess what, guys? That's the general threshold to this, to 120,000 baht. The threshold for required to file a tax return is very minimal. Now, if you have been living off of savings, you have not remitted any money in, if you have been living off of money that was already here to this, you're not going to have to file a Thai tax return. But if you've brought in that type of assessable income, of 60,000 baht or 120,000 baht of pensions or salary income, you're going to have to file a Thai tax return with this. We'll do questions afterwards. That's bringing it in. Now, yeah, right now we're still on a remittance basis of taxation. The current Thai minister has said that we are going to move towards the global taxation system, which blows the remittance, where the whole global things we can talk about later on in more meetings on this stuff with this, but that's coming down the pike supposedly from the Minister of Revenue with this. But for right now, for 2024, if you brought in more than 60,000 baht of interest or anything out of the bank accounts that was earned last year, more than 120,000 baht of pensions, you have to file a Thai tax return. Now there's vagaries on this of what are you going to use with a Thai tax treaty, and if that taxable income is not, if you brought in 120,000 baht and that's all not taxable income, do you have to file a tax return? The Thai Revenue Authority is very vague on that with this at this particular point, but if you don't file, you open yourself up to, I brought in $30,000 and it was all savings. You have to go to the Thais can audit you. You have to go in the office. You have to essentially file a tax return showing that wasn't taxable. Use the tax treaties. Guess what, guys? That's about a $2,000 to $3,000 charge rather than a $400 charge for doing a tax return in advance and saying, I brought this much money in and it wasn't taxable. It's up to you whether you want to take the risk on the $3,000 charges from us later on or the $400 charge now. A lot of people are saying, I'm just going to go ahead and report and not have to worry about getting called in later on.
Okay, to answer the question that who has the legal obligation to file a Thai tax return under the new tax regime. So in the year that you remit your foreign income into Thailand, and that year you meet all of these three conditions, and the amount of the income that you remit into Thailand more than the threshold, this threshold, please get a Thai tax ID. Please file a Thai tax return, guys. And in Thailand, for the tax return filing period of every year, it starts from 1st January to 31st March. So for the 2024 filing Thai tax return period starts from 1st January to 31st March of this year. So please be aware that last year, the year that you remit foreign income into Thailand, last year you meet all of these three conditions or not. And for the filing 2025 Thai tax return, it starts from 1st January to 31st March 2026. So please be aware that this year, the year that you remit your foreign income into Thailand, this year your scenario meets all of these three conditions or not. Okay, before I end my talk. I saw the poll in the website said that many expats in Thailand plan to move out of Thailand because they fear about this new tax regime. In my opinion, as a Thai tax attorney, guys, nowadays in the modern world or in the globalized era, we have both Thai tax planning combined together with international tax planning that make a person file a Thai tax return every year, pay less tax, potentially reduced to 0 Thai baht tax in every year. What does tax planning mean? Tax planning means minimize tax legally. And last thing, if you guys do everything correctly in every year, it does not matter what changes in the future. Let's assume that in the year 2029, the visa renewal requires a Thai tax return. And you start to get a Thai tax ID and start to file a Thai tax return in that year, 2029. The consequence is the revenue might challenge you back that why from the year 2024 to the year 2028 you never file a Thai tax return because the revenue found that your Thai bank account has some money that's transferred from abroad. Okay, so you have nothing to fear if you do everything correctly from now on. Thank you very much. ขอบคุณค่ะ
Guys, she was very, very scared to come speak today. Really intimidating. She did a hell of a good job. Now, that second and final point is a really important part of this. You may not be required to file a tax return, but if you don't, you open yourself up in several years down the road of like, wait a second, why didn't you file a tax return? You've had all this money in your bank account, where it came from. You're creating a paper trail if you do go ahead and file a return that will be much, much less expensive than trying to regenerate this in future years with this. One of the things we offer, and we're running out of time to be able to do these, is we've been doing a half-hour consultation for free for you guys as members with this. You call in and we'll be able to do that for you on an individual basis and go through your individual questions on these things with us. Again, we're running out of time to be able to do that effectively and efficiently with this, especially the amount of work that's flooding in on this. But if in doubt, do that consultation with it, guys. You don't want to get caught out in the background on this stuff because this gets mind-numbing complex. There's numerous tax treaties that are involved in all of this, and the flow of information is rough. And a small detail can kick you up with this. We can also help you with the planning. If you are married specifically, gifting is a big powerful way to minimize your taxation. We can help you set up international structures that allow you to move your money through and funds that allow you by tax treaty to avoid taxation here in Thailand as well. Do this. Planning makes a big difference. Ignorance of this is not an excuse in Thai law and can get you burnt on this and all the way up to potential deportation with this. Don't be one of those guys. There's a survey, one of the papers she was talking about said that 55% of expats aren't planning on filing a tax return with it, whether or not they have to or they know because they've never done the research with it. And we all saw different things that have happened over the years. If you've been here a long period of time, the insurance mandates and so forth. A lot of those guys who were saying, I'm not going to do that at the bar, aren't here any longer. If you're going to plan on staying, come talk to us. It's free to this, and my competitor does not do that. But we're offering that for you guys.
Thank you, Tom. Thomas and I have done some communication together, and he's well aware that I've set up the web page for the PCEC, giving what information we've been able to come up with. And my question is, when I did my research and looking back, of course, they had the 2023 tax return was, they had an English copy and also a guide in English to complete it. I don't know what the 2024 will look like because they haven't put the English version up yet. But at least in looking at the previous version of the return, it only required that you report assessable income. And according to the dual tax treaty, or dual tax agreement with Thailand, and in my case the U.S., it specifically exempts certain incomes such as Social Security, and in my case, I have a pension for federal government service, and that is also specifically exempt. Now, when I'm looking at the form, I cannot see anywhere to put such information or to show that it's not taxable. So maybe 2024 may have it. If you have information on it, I appreciate it very much.
Yeah. There's a debate on this, on whether or not you're required to file using the tax, if you're using a tax treaty benefit. Our suggestion is we file a tax return showing zero sum on the front of it, but with the electronic system, we're able to attach a statement to it, to the back of the return that says, here's the tax treaty designation that you're using, and this income was remitted into Thailand as not taxable to it. So it's actually, because one of the things that we had a constant issue with in talking, and actually Chacha, going back and forth to Thai office, was like, when are the new forms going to come out and address this stuff? When are the new forms come out? They have come out in Thai, and they don't address it, okay? Which means from our side, I'm a very big advocate on, if you aren't doing anything wrong, disclose. So that's the reason why in these things we recommend you do go ahead and file a return, but you attach the disclosure on the back side of it saying, yes, I remitted this income. It was not taxable by this part of the tax treaty and that part of the tax treaty.
Okay, thank you, Thomas. I appreciate that very much. And
there's one of the joys of doing this in my staff, and especially Kun Lek, whose head spins around on this all the time, is the systems they've tried to put in place in 15 months are still not adequate. This should have been, in my opinion, delayed by a couple years to allow this reporting to get the systems in place. But we're having to charge head into this and do this in ways that just there's not a lot of real guidance on. So in that particular case, the safe way to do it is disclose and caveat. Disclose and caveat.
Okay, thank you. In that regard, the tax identification number, I've already got mine, but in the case for everybody else's information, it's on our webpage, is you can go to the revenue office in Naklua, which is in the district office building, or you can go to their separate building in Jomtien, but you have to go to the one that has jurisdiction for where you are. And if you go to them, at least I've had more than 2 or 3 reports that said they were able to get their tax identification number within about 15 minutes with the proper documentation.
They've gotten a lot better because of the flood that's coming into this. I worry how that's going to happen in March when people start trying to panic on this with it, but right now, system's working.
Yeah. Also, in that regard, the Jomtien Immigration Office told one of our people that reported to me that his income also was from retired civil service with the U.S. government. When he went in and asked for an ID number, they wouldn't let him file the application. They said, based on your income, the dual tax, you're not required to file a return. So that could be a, as I...
Yeah, it's an area much like the ATM issue to this. A couple months ago, they were saying, nope, not on the, the ATM withdrawals aren't going to be counted. The ATM withdrawals were counted. And then they popped up and said the ATM withdrawals have to be counted as far as remittance to this. The not filing with the tax treaty, yo boy, you're opening yourself up to have to go through a discussion later on with things. And that's okay. You will win that argument eventually, but how much time do you want to spend arguing in a Thai tax office with somebody at Chacha sitting there doing this in the Thai language? It's not going to be cheap.
Why do you keep talking about earned income? I mean, what difference does it make whether you earned it or you found it in a box in your backyard? If you bring it into Thailand, you brought it into Thailand. How do you know where is the source of that money?
That's part of the big
earned
issue.
is an
Yeah.
irrelevant term. It's a moot point.
That's part of one of the gray areas in this, and people talking about whether they have to file a tax return or not, and whether you should describe where that money came from. In this particular case, the income that's coming in that has to be reported and is taxable specifically will be anything earned after January 1st, 2024, if you hit the 180 days last year. Now, there are two major exceptions to that rule. Okay, well, three. Okay, one, you're below the income threshold. You don't have to report. Two, you have the LTR visa. The LTR visa has an exemption for international income. Now, if you've made 60,000 baht in a Thai bank account, you'll still have to file a tax return, but you will only include your Thai income in that particular situation. If you've done 120,000 baht of pensions, you'd have to do that. But the date, if there is no income, you don't have to file a tax return. But income that's earned after January 1st, 2024 has to be reported. Now, theoretically, at some point, they're saying you don't have to bring in the income if it was earned, or you don't have to file a tax return if it was earned in the prior year. Problem with that is, how does the tax department know that? You would be called in at some point having to justify that money was remitted in prior to, that was earned prior to that date, and it came from savings. You would need copies of bank accounts or statements showing that was theoretically in some type of cash account with it. But to file your tax return, you don't need those documents at this particular point. But should you get audited, you would need that information to show where the source of funds comes from. This is going to become more and more of a paper trail, and the whole remittance issue, if it goes to global taxation, goes away completely in those years too. This will be a step up of complexity in this thing that's much, much more. This is kind of an interim step for the Thai government to move into the global taxation system. And one thing the gentleman was saying, blah, blah, there's the OECD plot and the IRS plot. I could tell you it's not an Internal Revenue Service plot. The Internal Revenue Service can't really get its head out of the donut machine with this. So they're not advocating one way or another of this, but it is true that the Thailand, to get more free trade agreements, is trying to move into the OECD, and they tend to minimize tax avoidance. They try to get everybody to sort of equalize their tax systems for membership. That's part of what this is happening with. But the other thing of this is, especially last year, tax revenue went down. They're searching for more money to this. And I have, we deal with some families that are the very high wealth Thai families, and these billionaires in US and European terms, guess what they did? They didn't spend 180 days in the country last year to this. This is affecting wealthy Thais as well.
Thanks, Thomas. Thanks. It's a bit of an obvious kind of answer that you'll give to this, but what about in terms of if you come in and you want a condo? Is this completely independent from the new?
Okay, yeah, we're losing you, but I think you're talking about if you're bringing money
if
into
you bring
to do a
in
business.
money, if you buy a condo under the foreign quota, or
okay,
it's complete.
Let me let Chacha answer this. I'll give you a little bit of feedback. Okay, we've been told in the past, and this is one of the gray areas, that pure capital for investment, okay, will not be taxable in this. So you're bringing an investment in, okay. Right now, though, they're not saying that's for a car or a condo or a house with it. That would theoretically be starting a business only with it, or to invest with it. One of the areas that they have to clarify on bringing and remitting money into it. The pure capital definition, as of this point, it applies to buying a condo, but they have not clarified that definition in any real way yet. It's one of the open questions that we have with the tax authorities. You're talking some economic affairs on whether it would drive up the price of condos or not. That would be hard to, actually, I think it would be less, because less people would be able to buy a condo with it. But what most people, in that particular situation, especially people are going to move into the country, what you do is you would spend less than 180 days in the country, and you can bring in an unlimited amount of money. That's really the simplest thing to do, is if you are bringing a large amount of money in, and say, I mean, I heard one gentleman say we want to spend 90 days in the UK, and he wanted to spend 9 months here. Spend 1 day less than 6 months here, and go play golf in Bali for 3 months with it. Go take a long cruise. You're not here for 180 days. You are free of these issues. You can bring an unlimited amount of money in.
Yeah, you talk all the time about income, but is there a distinction in the definitions between income and wealth transfer? Like if I'm coming into the country now, I have zero income, I have lots of wealth outside, and I just bring it in. It's not an income.
Yeah.
And not earned, let's say, in the last 3 years.
They've not given us a lot of definitions on what would be considered savings out there. Okay. But she's saying if it is savings, again, and anything you bring in that the income was earned prior to 2024, that is no tax. Reporting requirement kind of recommend it, but you don't necessarily have to with it. But yeah, that's pretty much the definition. Anything so now, one of the issues is if you say you sold your house in the UK, and 5 years ago you paid £250,000 for it. No way you're getting a house that price. And then you sell it for £300,000 and you bring that money in. Theoretically, the £250,000 original is your capital to this that can be brought in, because that was and only the £50,000 of income would be taxable with this. But their definitions on this are still need to be written. I mean, one of the things we got in this is if you are bringing in rental income into this country, you're going to have to do a full rental schedule in Thailand and show that, and then show the taxes paid on that rental income to this. That's one of the other things about this too, is there are foreign tax credits, especially by all the tax treaties. So if you bring that money in and tax treaty says it's taxable where it comes from, and say the UK, and you paid UK taxes on it, and the UK taxes are higher than Thai taxes, you will owe no Thai taxes on that with this. You'll just have to file the tax return and show the schedule on this. We've had a lot of German calls lately with this. German income is higher than it is, taxes are much higher than they are here. And those particular people, they benefit because they can bring that money in. It's a paperwork process on the German tax, showing the German taxes, because they get the tax credits here to this. Yeah, the majority of people are subject to double tax agreements, okay? Double tax agreements will generally mean that you're going to pay only one country's taxes. You don't pay countries in both things on this. Now, some things are taxable here, and they're not taxable. We had the gentleman earlier talk about federal government pensions. Federal government pensions in the United States stay taxable only in the United States by the Thai tax treaty. Social Security stays taxable in the United States only by the tax treaty. So somebody who's a federal government employee or on Social Security can bring in an unlimited amount of money into the country. We recommend you release that on your tax return with a caveat showing the tax treaty with us. And they've told us two things on that in the past. They've told us, yes, you should report, and they've told us, no, you shouldn't report. You don't have to report. It's back and forth. So if your specific situation, I can't do everybody's here, come talk to us. Again, with the free half-hour consultation, and we'll sit there and say, this is what the tax treaty says. This is what they're saying you don't have to do, and what you should do. Now, an example of a change and how fast this can change is that ATM statement. I was here about a little bit over 60 days ago, right before I left for Europe. At that particular moment, they were still saying ATM withdrawals are not going to be reported as a remittance. In 60 days, they've changed that rule. And I would bet that when somebody figures out the complexity of the tax treaty, they're going to come back and say, you should report to the income with a tax return on this. They're shifting back and forth and trying to write the rules as we're going along on this, which is the reason why I recommend disclose. You don't have to go and change and fix and pay penalties and interest on this stuff. Just do yourself a favor if you're going to stay here more than 180 days.
You mentioned the ATM. What about using a foreign credit card to purchase things here?
Theoretically, yes. Do this. However, they're generally de minimis rules. If you're going out to dinner with it, no. But at this particular point, they don't really seem to have any way to track that with it. But the rules are going to strengthen up where it's possible. But right now, there's no real way to track it and process, except for if they start going through that. Now, if you're paying your rent at 50,000 baht a month with your credit card, that's probably going to start sending up bells and whistles and you going out to dinner and buying groceries and stuff with it. Yeah, I can't even begin to give you what the threshold would be with it. But right now they're saying that's an electronic transfer from over it. Theoretically, yes. They've not specifically mentioned that in any of the publications, though.
So sorry, I see that the threshold for declare is 60,000 baht. So
Yeah.
for example, if you have like let's say your only income is like 100,000 baht interest from your Thai bank account, but it's already been taxed actually.
You do have to file a tax return.
You have to file it, but
Tax return.
if
In fact,
you're
I believe. No need to. She's telling me no need to file for 100,000.
actually, if you file, you are going to get a refund, basically, because
Tax withheld. Would you get a refund on tax withheld? You'd have to kunlek and calculate that one, but I believe so, because 150,000 baht is generally the taxable threshold.
yeah,
you get
so
it.
because
But that withholding tax is a final tax. No need to file a tax return at the end of the year.
If it's only bank interest, she's saying that's a final tax.
Okay.
You're not required to file a tax.
and then another question. You keep saying that. Yeah, I mean, if you like you get some any amount from abroad, is better if you in a way you have to let the revenue department know about it. But
It's and again, there's the issue of this is, and they've clearly stated this, that yes, you may not be required to file a tax return. They have the rights to go in and pull you in and effectively audit you as the U.S.
yeah, but
term.
I
with
see
this.
actually. Correct me if I'm wrong, but maybe at the moment there is not any space in the P90, P91 to write it down. Like I send this amount.
It has to be as an attached document that is electronically
okay.
attached to the yeah.
So
the tax
going-
forms, even the new ones, do not and they've stated this does not adequately
Thank
address
you.
it. It's an additional attachment and a caveat that has to go onto the back tax return in writing with it. Which unfortunately, and again, this is part of the fact that the rules are being written and regulations as they're coming along with this. And the ATM is an exact example of this. You know, we've been told numerous times, and then this comes up in a document they're requiring that. So safety says just be cautious and disclose, and you should be okay with it.
Thank you very much indeed for your presentation. Once you've got your tax identification number, how soon do the Inland Revenue contact you?
I don't think they. I don't know they contact you. I think you have the filing date for March 31st to file a tax return.
After 31st March, it can be when. It can be when.
Like it may at any point next year, next 2 years. There's no real contact date. No.
So I've got a tax identification number which I got from the tax office, the one that
Yeah.
took less than 15 minutes to
Yeah.
get. But now I just wait for them to contact me, or
No. You need to if you're required to file a tax return. If you want to file a tax return, you have to go prepare and file the tax return.
Well, I mean, the only income I've got is a pension. I presume that is not taxable in Thailand because I already pay tax on it in the UK.
Yes, no, and maybe. Come talk to us. You can go through the specific on it. You know, what type? Because the tax treaty will tell you what type of pension, and oddly, it may not be taxable under the tax treaty in the UK, but taxable here.
Oh no, it's taxable in the UK. I pay tax on it.
No. Weirdly, this is one of the things the tax treaty will do in occasions. And this wasn't a discussion we're going to do the tax treaties with. There's a whole variety of those. That's another conversation with this. But some of the tax treaties will say, and an example the gentleman who talked earlier was that his pensions and Social Security are only taxable in the United States. Now, if that were a private pension or a private pension or a private retirement account, weirdly, it is not taxable in the U.S. by the tax treaty and taxable here. Now what that means is if I had one of those pensions, I have to go to the U.S. and tell the U.S. government, hey, you had all this money withheld to this here. You have to give that money back to me because I have to go over here in Thailand and pay that pension. It's possible that the UK pension is not taxable there and taxable. Lee, do you remember the pension rules for UK off the top of your head? Yeah, not really. Which would mean what would happen is if it's taxable, if it's the UK pension is not taxing it, and I think that's correct off the top of my head. Again, I don't have the list in front of me. Yeah. So if the UK, if the tax treaty doesn't specifically talk about it, what would happen here is the UK would tax it, then you would report that income back to here because it is taxable, but they would give you a credit for the taxes paid in the UK. That's why you have to file a tax return.
Okay, thank you.
We have to wait.
Hang on, wait till I get the mic.
Okay, hold up.
Be patient. Hello, last summer I went to see Thomas. Great meeting, gave me a lot of advice. Scared me, so I had a beautiful fall in Cambodia. Spent 3 months in the U.S. and less than 180 days in Thailand. But I want to get back here and I want to live here. So I also went on and I got a 10-year long-term visa.
Yeah.
I got that in November. My question is, if I bring in money, I have to live off and cash in IRAs from the U.S., and I bring that money in, right, to Cambodia or into the Thailand for 2025. Is that taxable in the U.S. or in Thailand or nowhere?
Okay, I mean, I hate to give too much specifics, but this is one of the weird examples of this. This is how you plan and you take advantage.
Yes.
Okay.
I highly recommend seeing Thomas.
Yeah, thank you. The LTR, I remember very well. Well, the LTR visa, it makes you not taxable here in Thailand on your income coming into Thailand, and from that point, you're not even reportable in the tax return. However, you're still subject to terms of the U.S. tax treaty with this, because the U.S. tax treaty in this particular case, not every case, because each country is different, states a word that says only taxable in the place you're resident of for private pensions. So if you were not a government employee or this was not a government fund to this, you pull that money out of the United States, it is free of tax in the United States, flows in through here, and because only Thailand has the right of taxation, Thailand doesn't tax it, you live free of tax for the rest of your life. By the way, again, if we can't get hold of you, or you got specific questions, a lot of people don't like talking about their finances in a forum like this, contact us. You know, again, it's a free half-hour consultation, you know, to this. And I'm back up here. We've got a new office. In fact, Matthias, can you stand up for a moment? Matthias is the new head of our office here in Patcha as well. We're just in the process of getting him moved in, so it'll be a couple weeks before he's full-time. But we have a full-time office set up because we have so much demand here in Patcha.
Okay, I can show. Is that better now? Okay, on UK tax, if you pay UK tax, whether it is on pension or private pensions that you have, I would urge you to still, if you have income coming into here that is taxable by Thai regulations, then you have no worry.
Paperwork.
George.
If you spend less than 100 days in Thailand, yet you have a bank account with 4 million, 10 million, whatever the amount might be, do you need to fill in a tax return? I believe you don't, because the bank will tax you on that income that you receive from them, and again, you can reclaim it against your UK tax.
That's correct. If you just have a bank account here, the bank is automatically withhold. You receive dividends and interest here net of tax. You're not required to file a tax return.
Yeah. And my last question is, what about if you've got money coming into Thailand from an offshore bank, say Zappo, Gibraltar, because they're not going to be able to track that.
Actually, common reporting, one of the things that Thailand signed up was called Common Reporting Standard. And yeah, all those countries are signed up for Common Reporting Standard as well. There are some banks that are out there to this, but what's going to happen is you're going to see the money coming into Thailand, with the wire transfers, and that's the first thing that's going to start hitting here. People, the banks are going to start going, and we've been told this very specifically by from letters from banks that people have started getting, that we are going to start reporting all of your remittances into the Thai government. K-Bank was one of them. We got a couple letters. Not everybody gets these letters, but they're starting to send these things out and saying, we're going to start disclose remittances, wire transfers into the Thai government with us. So more than like that's the first setup on this. The second setup will start being, way in the future. They'll start actually checking the ATMs if that card was used more than 6 months, and then even potentially they start going all the way into the credit cards with us. This is literally just a way of looking at the bank transfers, and they can all see that through the ATM systems and all these systems electronically. It's just as much as manpower and everything else. But again, tax revenue was down last year, folks. Both the current government and the last one we just changed from are still trying to promise more than they can deliver in their current tax regimes, and so they're going after this. Now, the reality of it is, if you combine everybody in this room and remittances and everything to some of these wealthy high-so Thai families, they're bringing in much more money. This is really who this is aimed after, because those guys kept billions and billions of dollars offshore and never brought it into Thailand. So we're kind of the victim here of them going after those guys. But that's when they do these reforms, it happens almost every time. You catch a whole lot of small fish to get the big one.
So, very informative morning. We've run out of time. We've gone over time already. So, firstly, a huge round of applause, especially for Patcha. I mean, talking in your non-native language is a really big thing.